In this video, we'll be taking a look at a few chart analyses to get you prepared for the week ahead. If you love the content, please like, subscribe, and leave your thoughts in the comment section down below. And if you're interested in learning trade Forex like a professional, check out our complete Forex trading course on Udemy. We have over 4,000 enrolled students right now, and you can use the link in the description below to check that out. In this video, I'll be talking about gold, Nasdaq, US500, which is the S&P 500, and GBP-USD, because there aren't much opportunities around the market right now. So I'm going to go over a few of these charts to show you I'm looking at what I expect from the market within the coming week and how we can take advantage of the price action that's going to be discussed in this video. So as usual, we're starting with the gold charts, and this the 4 hours time frame on my screen. So gold chart on the 4 hours time frame, serious bullish trend. We've been following this for a few weeks now, even months, and we've been making serious gains as the price continues to climb higher, right? So last week we talked about the possibility of price breaking out from this bullish flag, right? We had that break, and if you watched that video and took advantage of this trade opportunity, that will give you around 650 to 700 pips profit, right? I took this trade, got out on Friday, I think. I got out about 1,000 pips or so, approximately, because my entry was a little lower, right? I entered a little earlier than what was discussed last week, which was also disclosed in the video. So at the moment, I don't see any opportunities on gold right now, right? So I wouldn't be jumping into a buy trade just because the trend is bullish. So what I expect is some sort of pullback, right? Maybe probably coming back to this trend line where I'll look for an opportunity to either go long or go short. Yes, I said go short. The reason is no trends last forever, right? Even if it's going to be a long-term bullish trend, you can expect those price swings, right? Price movement to the downside that gives the market an opportunity to even push higher, right? So in this case, by the time we take out this trend line, watching the market structure closely, I'm going to consider going short. But for now, we're still bullish, and I don't see any reason why you want to jump into a trade right now, because there's just no safe nets, right? So if you are jumping to a buy trade over here, if you are jumping to a buy trade over here, it means you're probably going to set your stop loss around these lows or these lows, which doesn't look like a smart move in my opinion, right? So that's the reason why I said there are no safety nets right now. All we have to do is stay patient with the market, watch what the market does, and watch out for those opportunities, right? We may not necessarily see price coming back to this trend line to give us some opportunity to go long. We may see consolidations, like a bullish continuation pattern. When this forms, gets a bullish breakout, that can be an opportunity to go long. But if this doesn't happen, there's no need to rush. There's no need to jump to a trade. So the reason I wait for patterns like this is because if this happens and we get a bullish breakout, then it's easy, more realistic, good risk management, proper practice to have tighter stop loss, right? So this pattern will enable us to set our stop loss underneath the overall consolidation that leads to the breakout. Then you have a tighter stop loss with massive upside, right? Because we're currently in price discoveries. There's no telling how high gold is going to get before it reverses, right? So if we get a consolidation like this, which is something I'm also watching out for, we get a bullish breakout, that's going to be an opportunity for me to go long. Other than this, I don't see any reason why you want to go long right now or even go short, right? So this is what I'm watching out for, first case scenario. So another reason why I'm watching out for this is that price is currently being overbought, right? You can see over here, price is being overbought, and I think there's a good chance we see this overbought level cooling down a little before maybe going higher again. And in the process of cooling down, that's where we may see this consolidation I'm talking about, right? It may be a bullish rectangle, bullish symmetrical triangle with a symmetrical triangle with a bullish breakout, and ascending triangle, whatever chart pattern you get. As far as at the end of that chart pattern you get a bullish breakout, that should be your confirmation to go long in continuation of the trend. So similar to what we had over here, right? But this one spent months, right? Weeks rather, to be fully formed before we had this move to the upside. So I'm not saying something like this that will take months is going to be formed here. It's possible that it does, but more realistically is waiting for some sort of pullback consolidation that gives us a confirmation of a continuation of the trend before we go long. That's exactly what I'm watching out for, right? So something else to pay attention to is if you extrapolate this trend line, so you clone this and you adjust it to the highs. So this immediate high over here, right? You will notice there's a good chance we go as high as this trend line before we come down, right? So this is just something I'm looking at. So I'm not saying this is going to happen, but it's something to pay attention to. So around this price level may be a potential price level for a price reversal. So alternatively, you could adjust your trend line like this, taking its highs. Legacy tradition says we have to watch out for at least two highs, right? So if you're watching for two highs, then that will be this one and this one. So that could also mean price getting as high as this price level before we get those pullbacks, right? And then another opportunity to go long. So this is just something I'm watching out for on gold. I'm not really looking to take any trades this week because I don't think the pattern I'm watching out for is going to be formed this week. So I'm going to be more patient with gold, watch out market structure, see what price does over the coming days, right? So by next weekend, when we discuss again, we may see better opportunities to discuss for a trade next week. So in summary, this week I wouldn't be trading gold first time in a while. That's because I don't see any trade opportunities forming this week for me to take advantage of what I can see on the charts. So the only exception to that rule is if we get a drastic price movement to the downside. So let's say something happens in the market, we get a small pump up, then we get a massive dump to the downside, which then returns back to the upside with a bullish confirmation. Then this is something that could, possibly something that could possibly make me change my mind to want to take an opportunity or take this trade, right? But I don't think all this is going to happen this week, but you never know. Markets can be surprising sometimes. So that's it briefly for gold. Just want to show you what I'm watching out for and how I'm looking at the markets right now. I don't really see any reason why you should jump into a buy trade or sell trade. Be patient, right? This is one of those times where you are patient, especially if you do trade gold. Moving on, we're talking about Nasdaq. Nasdaq also a challenging chart to to trade at the moment, right? The market structure seems clear. You can see clear highs and clear lows, higher highs, higher lows, right? You can see this clear area of value, breakout, retest. We seem to be trading above it, and it only makes sense to maybe wait for more consolidation and then a bullish breakout to go long, right? So it only makes sense to watch out for something like this to go long because that's what the price action is showing us right now. But as you can see, I have multiple lines on chart, and I'm sorry if this looks messy. I think there's a good chance we see price coming all the way back to this trend line, right, before we go higher. There's no guarantee that it's going to happen, and there's nothing on chart right now pointing to the fact that this is going to happen, but I'm just leaving my options open, right? Sometimes markets can look too good to be true, and you just get in, and the next thing you see price going to those levels you didn't even think price would get to. So that's the case we have on Nasdaq right now, right? So we've been trading closely around the resistance level of this rising wedge. So this is a rising wedge, right? And there's a good chance we get a bearish breakout, a bullish breakout, right? But at the moment, the stock market in the US, it's bullish, looks positive, right? So there's a good chance we're going to get higher. But I don't want to rush too much into going long when I know there's a good chance we may go down before going long. I don't know if you get my point. So that's the reason why I have this area of values. So if you want to go long, around this price level is a good level to go long, right? So going long over here, because we just had this nice bounce, now price gearing to go higher, right? So this looks like a good opportunity to go long with your stop loss underneath this area of value. If you should go long, no one will fault you for doing this, right? And if you check this, the stop loss is going to potentially 300 pips, right? Which is a decent stop loss level for Nasdaq. So if you are patient enough, you could wait for maybe price to come down here, retest again, give you another bounce, and then before you go long. So this way you get a much more tighter stop loss, right? Excuse me. You get a better risk to reward ratio with tighter stop loss, right? So if you do this, potentially this will give you an approximate stop loss of 250 pips, right? So better than 300 or 350 pips stop loss. So in essence, what I'm trying to say is, if you are going to be going long over here, pay attention to this trend line, because there's a good chance we come to this trend line, bounce before we go higher, and we may not necessarily hit this area of value, this one over here, right? We may not come over here, we may not come here, right? I know some people may think, okay, we're probably gonna retest this area of value. We may not go there. We may bounce as soon as we touch this trend line. Just something to pay attention to. But overall, I'm more bullish than bearish, right? I just want to be patient enough to see what the market does before I get into this trade on Nasdaq, right? Keeping my options open, sticking with low risk, and if the market continues to give me the bullish confirmations that I'm looking at right now, then I may just simply jump in. Good risk management, and I'll be okay, right? So another price level to pay attention to is taking these lows. So if you take these lows, right? So this is something to also pay attention to. You would notice it coincides with price coming into this area of value one more time. So this will eventually touch this trend line, and this could be another confirmation to go long. So if this happens without breaking this trend line, then that could be a confirmation to go long for higher price targets. The reason I'm also bullish, extremely bullish on Nasdaq, is because US30 has broken our all-time highs, US500 has broken our all-time highs, but Nasdaq hasn't. So there's a good chance Nasdaq pushes higher a little more before going lower, right? But keep your options open, mark out your levels, and make sure you understand the risk you are taking before jumping into any trade. So this is how I'm looking at Nasdaq right now. I wouldn't be jumping to a long position right now until I get more confirmation. Okay, I get more confidence in the trade before going long. That's it briefly for Nasdaq. I hope you learned a thing or two. Yeah. If you disagree with me, please leave your comments, right? Leave your thoughts in the comment section down below, and I will do well to check them out. Moving on, we'll be talking about US500. So US500, very sweet and clean chart with clearly defined area of values, right? You can see clear area of resistance, good breakout, clear consolidation and retest, good breakout, clear retest and consolidation, nice movement to the upside. Now we are having another resistance being formed. So this is a 2 hours time frame, and I want us to focus on what we have over here, because this is what's most important right now on this chart, right? So going out to the 1 hour time frame, so we are able to pay close attention to these price levels. Just going to zoom in a little. So this is the 1 hour time frame on US500. Obviously, you already know the condition to go long, and that will be waiting to see if price takes out this area of resistance, right? The moment we take out this area of resistance, we get a good candle close above. I'm going long. Okay, I'm going long. Stop loss obviously is going to be underneath these price levels, maybe around these lows, and this will be approximately, let me guess, maybe 500 pips stop loss, 400 pips stop loss, right? Decent stop loss for me when trading US500. And you can just trade your positions to go higher because these all-time highs, so there are no clearly defined levels right now to set your take profit target. All you have to do is be satisfied with your profit, trade your positions to go higher. Maybe every 200 pips, adjust your stop loss to maybe 50 pips higher, right? Or 150 pips below the current price, right? That's when you start trading in profit. Okay, so that's how I'm going to trade US500. So that's for a bullish case scenario, getting a good candle close above this area of value. Mind you, it may not happen immediately. It may happen immediately, but what will give us a even sweeter, more confidence, confirmation will be seeing price consolidate a little over here, and then before breaking out. So if this happens, breakout obviously is going to get your entry. Stop loss is going to be underneath the consolidation at least to the breakout, and you trade your positions as we go higher. So as for a short position, the reason why I'm also considering a short position is because this is a good area of resistance, and if you take this trend line like this, you would also notice we're creating some sort of an ascending triangle, right? So taking these lows like this looks like an ascending triangle in my opinion, and ascending triangle can get a breakout in 2 directions, either to the downside or to the upside. Though this is a bullish trend, so we are more inclined to watching out for bullish breakouts, right? So there's a good chance, right, we come over here, touch this trend line, go up before we get a bullish breakout. So if the bullish breakout happens, like I explained earlier, we go long on the bullish breakouts, and our stop loss goes underneath the consolidation that leads to the breakout. This is how I'm going to trade US500 on a 1 hour time frame for a long trade opportunity. But for a short trade opportunity, I'm going to wait for price to slowly come down, go up, consolidate, and give us that bearish breakout to the downside, right? So the moment this breaks out, you have limited price levels to set your stop loss, right? You could set your stop loss here. Stop loss can be here, or stop loss could be here. So the reason why we're marking at this level is because, remember, this is still a bullish trend. So even if we get a bearish breakout, each or any of these levels could be a stumbling block to the price, right? Preventing price from falling lower, because it's a clear bullish trend and the bulls are in charge. So we may get those bullish reversals at any price levels at any time. So that's why when you're going for a short position in this case, you watch out for these levels to take profit. So you could take partial profit all the way down as we go lower, or you could simply adjust your stop loss to entry when we get to one of these levels, so just in case we fall lower, right? So something to pay attention to. So you are going short in the bullish trend, you watch out for those levels that could eventually or possibly see price going higher, right? But for me, I do think I'm more bullish on this. So we get a bullish breakout, I go long. I don't think I'll be going short when we get a bearish breakout, because we are likely going to be stopped at any of these price levels and there's no way to tell which one, right? So if we do get a bearish breakout, better for me, because if we get a bearish breakout, for example, I don't take the trade, it goes down and goes all the way to this level, then I'm going to look for opportunity to go long. So over here is where I'm going to look for my next opportunities to go long if we do get a bearish breakout to the downside. But if we don't, then I think we're likely going to go down and come back up, taking out this area of resistance. So this is exactly how I'm going to trade US500. I hope that's clear enough. If you have questions, guys, use the comment section, ask me your questions. If you're not part of our Discord community, use the link in the description below to join our Discord. We have people and traders ready to answer your questions 24/7, right? So moving on, lastly, we're talking about GBP-USD. So I talked about GBP-USD last week. Didn't turn out as I expected. We had more price decline to the downside, currently bouncing off of this area of value I've highlighted on my chart. Mainly, this is a 2 hours time frame, and clearly this is a bullish trend, higher highs, higher lows. Now what am I watching out for? So there's a good chance we come all the way down to this trend line before we get a good bounce to the upside for a bullish move to the upside. This is what I'm watching out for on GBP-USD. I'm waiting for an extended price movement to the downside, which we see price coming into this area of value, which is this bullish trend line, right? Ascending trend line, before we bounce to the upside. This is what I'm watching out for to go long on GBP-USD. Another case scenario is seeing price consolidate over here, right? Then taking out this trend line. So this one I drew here. So I'm going to zoom in a little so you see what I'm talking about. This is going to be a good trade, right? Because of the way it's structured. So bouncing up this area of value, taking out this trend line. Yes, good trade. But a better trade would be waiting patiently or hoping that the market comes like this, comes to this trend line before actually going higher to break this other trend line. So like this. So this would be the better trade opportunity. Then your entry can easily be above the breakout after we bounce off these lows. Stop loss can easily be placed around this, underneath these lows that leads to the breakout, right? So that will indirectly place your stop loss below this trend line, which is safe zone. And if you take a major price movement, entry to stop loss will be approximately 71 pips. Potential take profit around this high, which is 400 pips. Decent trade opportunity in my opinion if this happens. So I'm watching GBP-USD closely, and I'm hoping that we do get that move to the downside, hitting this trend line. So if that happens, I'm going to look for my buys. But if we break out from this trend line immediately, I don't think I'll be jumping to that trade, because even if you put your stop loss underneath these lows, it's still within the bounds and the confines of this trend line. So if we get a breakout, so let's say we do get a breakout like this, there's a good chance we can easily come down before we go higher again. So that's why it would be nice and better for us to come all the way down, hit the trend line first, then try to break higher, right? This would be the better trade opportunity. Though this first one, breaking the trend line immediately will be a good trade opportunity, this one will be the better trade opportunity, and that's what I'm watching out for, right? When you are making analysis in the market, you try to aim for the best trade opportunities, and even if it doesn't happen, market moves without you getting in, there's no need to FOMO in, because there are always going to be opportunities in market for you to take advantage of, the price action you can see on the chart. So that's it for this week's analysis. I hope you learned a thing or two. I hope it was helpful. I know it sounds like we're going to be patient this week, watch the market, see what the market does before we take trades, which may probably make us being sidelined from all the actions in the market, but it's worth the wait. At least you're not losing any money, but there's always going to be a good opportunity for you to take trades to make decent profits. If you have thoughts, guys, please leave your thoughts in the comment section down below. Once again, if you're interested in learning Forex like a professional, check out our complete Forex training course on Udemy. I have the link attached in the description below. That's it from me this week, guys. See you next week.